Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Markets seemed relieved that the Iranians responded in a localised and measured way to the US attack. They took this as a sign the conflict will stay regional. Even the oil price eased back. To financial markets, normal doesn't look like it is being threatened. But that is not to say normal is great, and it looks like markets are stubbornly refusing to price in geopolitical risks, even when they're obviously high. If they have this collective judgment wrong, then the correction could be sharp. Meanwhile, the S&P Global Market PMIs for the US report that their factory sector held at a small expansion, one underpinned by a small rise in new orders, even if new export orders fell rather notably. More notable was the sharpish rise in costs and prices. This sector is losing international competitiveness. Their services sector is expanding, but the modest pace slowed in June. And US existing home sales, however, brought a surprise surge in May from April to a sales rate exceeding 4 million a year. However, that is still lower than year-ago levels, and listings surged even more. Still, the average price rose to $422,800, although to be fair, that is only back to the level it first achieved in June 2022. And the US heatwave, which we noted yesterday may affect 200 million people there, is worrying their electricity grid operators. They anticipate a 14-year high for electricity demand in the US Northeast, so it'll be no surprise to know that they have issued warnings about supply interruptions. In China, Bloomberg is reporting that Beijing regulators are instructing state-owned developers to avoid defaulting on publicly issued debt. It is the latest attempt by authorities to keep a lid on their property crisis that just won't end or get properly resolved. There are about 20 SOE developers, all large and all troubled. Clearly, credit risk is still worryingly high there. In Japan, although new order growth wasn't flash, their manufacturing sector expanded on a stock build, and that was their first expansion in over a year. Meanwhile, their services expansion extended now to more than 12 months consecutively, and that was driven by new orders. In India, their advanced June PMIs show gains in both their factory and services sectors from already good levels of expansion. In Europe, the same June PMIs show new order declines have basically ended, and in Germany in particular, they rose for the first time in more than 3 years. Cost inflation is down and now no longer an issue. Business sentiment rose. Their factory sector is expanding while their services sector stopped contracting in June. While none of this is vigorous, if it is a turning point, it is turning in the right way for them. Meanwhile, the modest expansion in the PMI's report for Australia extends this modestly to 6 straight months there. They haven't had a run like this since late 2022. While an expansion will be hard to notice on the ground, it is encouraging that both the factory sector and the services sector are moving in the same upward direction. The US Treasury 10-year yield is now at 4.33% and down 5 basis points from yesterday at this time. And the price of gold will start today at $3,381 an ounce, up $14 from yesterday. American oil prices are down $4 from yesterday at just under $68 a barrel, while the international Brent price is now just over $72.50 a barrel and down a bit more. And the Kiwi dollar is still at 59.7 US cents, little change from yesterday. Against the Aussie, we're holding at 92.5 Australian cents. Against the euro, we're down 20 basis points at 51.6 euro cents. That all means our trade-weighted index starts today at just under 67.7 and just marginally softer than yesterday. And the Bitcoin price starts today at $102,349 and back up 2.8% from yesterday. Volatility over the past 24 hours has been moderate at just under 2%. And there was a general recovery yesterday across most cryptos, but they're still down sharply from a week ago. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.